Bitcoin starts yet another 2022 week in the red with a 2% loss in 24 hours and a 13.5% loss in 7 days. The benchmark crypto has been on a downtrend since the end of 2021 and could potentially dip further due to macroeconomic factors. Related reading TA, Bitcoin key indicators suggest a strengthening case for more downsides at least. The above seems to correspond with the general sentiment in the market. The US Federal Reserve is turning more hawkish due to a rise in inflation metrics, hitting new highs for the first time in 40 years. Thus, turning potential price expectations for Bitcoin bearish as many believe risk assets will suffer in the short term from a shift in the Fed's monetary policy. Economist Alex Kruger recently presented a thesis in favor of the bulls. Wyatt Woodbury said this has been extraordinarily bearish due to the speed of the Fed's turnaround. Raising rates or tapering quantitative easing, should not be bearish enough to change the upwards trend across assets. The Economist claims the recent price action to the downside has been triggered not just by the Fed's intention to modify its policies in light of the rise in inflation metrics, but mostly due to the speed in its decision. In a short period, the U.S. financial institution changed its position from no interest rates hike to several rate hikes planned for 2022, a reduction in its asset purchase program, and balance sheet normalization. The latter is the most bearish for global markets. To normalize its balance sheet, the Fed would begin a quantitative tightening (QT) program which could lead it to sell around $50 billion worth of assets every month. Kruger added the following on the potential implications for the crypto market: simple. Crypto assets are at the furthest end of the risk curve.